Hi, Jason Andersen.
Even before it was cool.
And high def is a cool thing. All right. Hey, we are live for the inaugural podcast of the More Insights and Strategy. We have to update that logo and make it crisper. IT Talk Podcast. My name is Matt Kimball, and I am joined by VP and Principal Analyst Jason Andersen of all things apps and AI. And we are here to talk about all things IT. Hey, Jason, before we get into this, tell us a little bit about who you are, okay? Why do you matter in this world, Jason? Or do you matter in this world?
So I'd like to think I matter. I've been in the tech industry now for almost 30 years, actually 30 years. And I've been an analyst now working with you and with the rest of the More team for about 2 years now. And prior to that, I had a number of different roles in the world of product management and product marketing across a wide spectrum of technologies. I worked in the world of systems, building out edge compute devices. I did middleware, Java, application development tools, all kinds of different product management tasks over the years, and worked at some fairly big and then also some pretty nice mid-sized companies. Like I worked at IBM. I worked at Red Hat back when it was cool before it was acquired by IBM. And I also had spent a bit of a different path into the product world, where I was actually out in the field for about 10 or 15 years before I started doing product management, both in consulting roles, sales roles, and in tech sales roles. So I also just had always a very deep centricity towards customers, and really kind of trying to bring their information and bring their needs into the products I built and brought to market. So I have a pretty healthy dose of experience working with the IT community, which is why this is a great fit for us with the IT Tech Podcast. And I also think what's super cool right now is that people are actually starting to play with, learn, scale, figure out how AI can help them. And that's really been the locus of my research for the last 2 years. So now we're starting to see it go from, a toy into something that's usable for businesses. So the timing for this is perfect in terms of this podcast and kind of the research I've been doing the last couple of years coming into more mainstream use.
Yeah.
So, yeah,
really I like what you hit on there with regards to kind of your background, because for me, I think what makes More Insights unique and what is going to make this podcast unique as well is this notion of kind of context and relevance, right? You've walked through the shoes of IT folks, kind of enterprise IT, kind of what they do, how they think, what they care about. And that is super, super important. And kind of, I have a similar background in that I kind of played every role you can think of in the IT value chain. And I think when we can talk to these things and we can talk about them in a real way with lived experience, it kind of adds a little bit to what we're going to kind of cover in our topics.
Yeah, that's something that really, it's funny because, as you know, especially is prior to being an analyst, I was a consumer of many analyst products, including some stuff from More. And when I decided to leave the corporate world and get into more of the thought leadership space, you were the first guys I called because of what you always brought to the table to, companies like when I worked at Stratus, right? You add a lot of value to what we did. And so that is, so I'm always happy to say I'm not just a More analyst. I was also a customer at one point. And I think that's been a super helpful thing in terms of just also in terms of if you're tuning into this to learn more about analysts, I do think we have a lot to offer. And I do think we have a really great perspective and a market, a niche in our market compared to some of the other folks out there. And I should know I was a Gartner client, an IDC client, More 451 Group, Standards and Poor's, you name it. I talked to them all when I was running product lines.
So we're going to have fun.
Yeah.
So for the audience, tune in every other week. We'll be doing these at 10:30 Eastern time. going to spend 30 minutes hitting on a few topics that are either kind of news related or just topical. We'll each kind of kick off a topic and then kind of have a little discussion on it, move on to the next. But before we get into those, though, you're going to hear this every blessed podcast we do. What we're talking about here are our own musings and our own opinions and our own thoughts. If you, for a minute, think that what we're talking about should be taken as financial advice, you should lose all of your money. We are just giving opinions. We're not financial advisors or investor advisors.
And there's a good chance you will lose your money.
And there's a good chance you will lose your money. I can show you my portfolio. We're really just here to kind of sit on the sidelines and talk about what we're seeing and hearing, and maybe give some informed opinions, but just opinions. So anyway, so with that said, Jason, we're going to jump into a couple things for this podcast. My hope is that, and our hope is that we kind of turn this into a couple of topics each, but given this is our inaugural, we're each going to hit on a topic. I'm going to dig into AMD's financial earnings this past week, and you are going to talk about, is that in there?
Yeah.
You're going to talk about how AI is killing software platforms, or whether it is or not.
Right.
Right. So with that said, let's just jump in and kind of start kind of having a conversation. So it is earnings season. Everybody's out there. IBM had some stellar earnings last week. AMD's earnings came out this week, and we thought they were pretty stellar when they hit. Record-breaking numbers in terms of revenue for the year, $34.6 billion, up 34%. Gross margins, 50%, great, yada, yada, yada. Q4, really strong again, record Q4 revenue. And in data center in particular, again, killer numbers. Revenue, $5.4 billion, up 39% year over year. Operating income, up 51% year over year. Operating margin up. The guide was up. And so Lisa Su and team get on and give a really stellar kind of report. And as soon as the conversation and remarks and question and answers end, the stock goes down by about 8%. And over the next day, it goes down further and further. And the question is whether this is a sign of the market becoming a little bit weary of the AI, what some would say bubble, whether it's AMD not showing enough aggressiveness in terms of its AI roadmap, AI enablement roadmap, specifically around Instinct, or if it's something else. I'm going to give my opinion. I'm going to let you kind of weigh in and challenge me, give your own. So here's what I think is going on. First off, when you peel back the numbers on their numbers, their revenue, about 800 million of what they reported in data center GPU was from prior quarter GPU shipments to China that we just recognized that are not going to be accounted for moving forward. And I think there's a little bit of concern from the street in terms of how bright AMD sees fiscal 26 for its GPU roadmap, and whether the market believes that AMD has a sustainable kind of competitiveness, or we're just seeing kind of blips, whereas one big CSP comes and cloud service provider comes and makes a big acquisition of GPUs because there's a supply chain issue with the other player named NVIDIA, or if this is sustainable. I think the market's going to do what the market is going to do. And they're going to, if AMD doesn't give NVIDIA-like numbers for the next quarter, in the following 4 quarters, they're going to be punished. I think it's a dumb way to look at a company, but that's how the financial markets work, right? They're looking a quarter, 2 quarters out, and even when they're looking long term, it's based on, it's not based on kind of the inside understandings we have of all of this. When you look at the Instinct roadmap, it's solid. You could argue it's a more competitive roadmap than what NVIDIA has in terms of hardware. Where AMD is gapped in terms of software support, I think that goes away as more cloud providers adopt Instinct in the MI and optimize for it and build tools that enable the quick adoption of it. And all of that kind of flows downstream into the enterprise. And thirdly, I think the enterprise market is way open. And anybody who thinks that NVIDIA owns the enterprise inference market does not understand inference. It is anybody's game. We're in the bottom of the second inning, maybe the top of the second inning, and there's a long way to go. And there's a company called AMD, and there's custom chips from cloud providers like AWS, Azure, and Google. And there are all kinds of third-party inference chips that are going to meet very specific needs. And it is anybody's game, and everybody is going to be successful, I believe. And I'm going to shut up there and let you jump in because I just talked way too long.
Okay, so let me hit it with a couple more thoughts. One thing that really stood out with me outside of financial announcements was actually sitting down and seeing just how many announcements cloud providers put out there about the MI350, right? So if you look at the span of the last 3 months in terms of new instances launched by, say, the top 5, 10 cloud providers out there, or even just the top 3, the number of new AMD-based instances was notable. So notable, in fact, that they brought it up on the earnings call, but you could just see it in the announcement in the news wires and so forth. So the fact is that you're seeing a lot more openness in the cloud side of things when it comes to looking beyond the NVIDIA world. And I think that is what kind of giveth and taketh away. The opportunity to, as you just stated, is there for AMD to take. But the flip side right now is there is seemingly more competitors developing custom silicon-based solutions. I mean, if you look at Ironwood at Google and you see what happens at Trainium and so forth, that is, so AMD's kind of still a little bit stuck in the sense of they're not the biggest player, and there's always seems to be somebody else nipping at their heels. So I do think that makes people jittery in the market. Yeah. But when you just look at the overall momentum that they've had, it is kind of undeniable. So I do think they were a little bit unfairly punished for, what is actual real tangible, results and a real tangible roadmap. They've been able to prove that they can execute. So, the fact is that maybe what they really need is a little bit more of a glow up in terms of some of their marketing and awareness, because the truth is they are delivering to the market. So that was one, but like I said, I can also see people getting the jitters because you see what's going on with custom silicon, but the reality is AMD is still strong. And then on the CPU side, it's the same thing. They came out and said, in the x86 market, they're now 40% of x86. I mean, Matt, you and I have been around long enough to be shocked at that number, because even 5 years ago, a 40% market share within that subsegment is, I don't think we would have predicted that.
No.
Right.
I was at AMD. Yeah, I was at AMD at their highest when they were, with Opteron, the previous data center CPU they had, and they were. I think we tapped out at about 27% market share, 26 or 27%. And with EPYC, to me, what's more impressive on the EPYC side is it's not even necessarily the market share, because a lot of that is in cloud right now. It's impressive, don't get me wrong. A lot of that is in the cloud space right now, the hyperscale space. But where AMD is starting to gain traction is in the sticky enterprise market, that market that has built optimizations and tooling around an Intel architecture for the last 20 years or so. And as that opens up, AMD is you're going to see EPYC market share grow even greater. And that's good quite frankly, it's good for Intel as well. One last point, Jason, I want to throw on the GPU side. I think the strategic landing zone I see for AMD and for others is in that enterprise space. And I think this is an area that gets overlooked. NVIDIA has virtually no enterprise footprint, unless you're talking HPC-like workloads that they have done for crash test analysis, for financial market analysis, real-time trading, stuff like that. AMD has a very strong footprint. To what you're saying, if they can leverage that footprint and build out the right campaigns around that to draw the affinity between an Epic and an Instinct and the MI400, and it's not just Helios and these big rack scale kind of systems, but these enterprise deployments of AI factories, they have a really strong chance of gaining that long-term sustainability that they're looking for.
And your point on inference is spot on. It's wide open. Yeah. The when you start getting into watts per watts per flops, and when you get into cost per, that market is not the same as the training market. It's different.
No, not at all. Anyway, we could talk this into the ground, but fun topic. Let's move on to something that I think you're going to find a little bit more interesting because you're a nerd. AI software platforms. Tell us, Jason, is AI a serial killer?
So, if we're here in February of 2026, at the end of 2024, Satya Nadella came out and said that AI was going to kill the SaaS market, and created a lot of ripples through the whole industry. A lot of people have talked about it, debated over it the last year and the whole thing. And then you have this kind of interesting moment in the last week or so where both Anthropic and OpenAI dropped new products that are very tailored towards the enterprise, in terms of like agent builder type of technologies. And that's a space I've been following, since agent became a thing. And it sent, the headline is, $1 trillion in market value ran out of the software companies. Okay. So, just to be, maybe do a little humble brag here. I was on the BBC yesterday talking about this. I've been getting asked by all sorts of different media outlets about this. And I'm going to say that it's kind of funny because there's a lot of hype around it, but there's also this real serious kernel of truth. And then there's kind of how it plays out in the long term. So there's really kind of 3 points to this argument, right? The first is that I'm going to argue that a lot of these software companies are probably overvalued anyways because they've spent the last year or so AI washing themselves, right? They came out with what I would say a number of functionalities that had, we'll call it Gen 1 type of AI capabilities like bots and so forth. And they could do some kind of clever things with LLMs and some basic automations. But what happened is that these new disruptive companies have come along, and they're kind of in this position of, they've got this halo around them of being, monster valuations and a lot of high expectations around them. But the truth is that, these companies probably haven't innovated as quickly, and they haven't really stayed on task. Now, part of that's because they have a big business to run, and AI is only one part of their business. But part of it simply is just that they just haven't stayed on message about AI and agentic and how it's actually what their innovation roadmap is. So on some extent, this was self-inflicted. Interestingly enough, both the OpenAI Frontier product and co-work from Anthropic, everybody has one of these. So it's not necessarily that, Amazon has one, Salesforce has it. So basically everybody has now an agent builder. And to be quite frank, the ones from OpenAI and Anthropic are interesting, but they're not necessarily hugely disruptive. So the truth is that the truth behind this, as you kind of look at it, is yes, there was a market correction. Maybe some of that was self-inflicted by the companies upon which it was unleashed, right? But then the second part of this is, well, is it really that disruptive? And my take on it is not really yet, right? Which brings us to the third leg of the stool, which is, well, how are these companies actually going to defend themselves and or take advantage of the next opportunity, right? And I think that's really where kind of the cool part of the story is, right? Because when you break down what's going on is that SaaS products historically have been remarkably sticky, like mainframe levels of sticky. Yeah. Once that data goes into your SaaS product, it's really hard to extract it. Yep. And it's not the agent tool builder thing that's going to hurt SaaS. It's the AI capabilities that are going to reduce the barriers to leaving SaaS companies. It's, these companies have built these giant moats around themselves in terms of locking up your data and in terms of proprietary business logic and in terms of proprietary APIs and programming languages and all these other things. And properly done AI can actually make it very easy for you to move away from that SaaS platform. And it really reduces the barrier to entry for new competition, whether that's OpenAI or some company that is not even seed rounded yet, right? It's a thought in somebody's head at Stanford right now.
Yeah.
That's what's going on. So the kernel of truth behind all of this is that those companies are somewhat exposed, but what got them exposed and got them hurt in the market isn't necessarily what's going to be what hurts them. What hurts them is what's coming down the road, where it's going to be, oh, you're using SaaS product X. Well, I've got new SaaS product and I'm going to charge half as much for it because I don't have as much, crap that you don't use in the first place in it. And I'm going to make it really easy to migrate and pull all the data out and move it in. And by the way, normalize that data. And you don't have to pay, GSI or service company X $3 million to do that migration. We're going to do that migration for $100,000, and you're going to save a ton of money. And that's when you're going to start to really see these SaaS companies get impacted. So is AI killing software platforms? The answer is not today. But you go out 24, 36 months, maybe even 12 months from now, some of these people are going to be very exposed. And unless they start to really, I hate to say it, but redouble their efforts on the next AI inventions and the next things. I'll give you an example. I was on a call yesterday with SAP, and they're actually building out their own models to do a better job with tabular data. Off-the-shelf LLMs do not do great work with numbers. And it's a known fact. So SAP was like, well, how much of our stuff is in tabular data? How much of it is structured? And the answer is a ton. Actually, probably most of it in SAP is. So they have their own model now that's actually really adept at working with SAP data. That's the type of innovation companies are going to have to do in order to get, just putting up a bot that you can say, who's my biggest customer is useless, right? It's going to be those second, third, and fourth level questions that a business user is going to want to ask that are important. And like I said, it's nice to see companies like SAP talking about this stuff and going, hey, we've got this new innovation here, and it actually makes our solution more sticky and even better than it was before. That's what's going to get people to buy into a certain company's strategy going forward. So they're not dead yet, and I don't think they're all going to die, but some of them are absolutely exposed. So I would say it's mortally wounding some software companies.
It sounds like a Monty Python skit.
Yes. They've had their legs chopped off, but not the arms yet.
I'm not dead yet. I wonder, because I talk to a lot of folks that are in enterprise IT, and it feels to me, and this is all anecdotal, obviously, but it feels to me that when I talk to these folks, I leave virtually every conversation going, they just don't know how AI is going to play in their company yet. And you can say generative, more discrete, agentic, they just don't know yet. They don't understand the impact. They don't understand how they're going to manage from a data perspective, from a augmenting their workloads or workflows perspective. It's kind of like business process analysis 2.0 or 3.0 or 4.0.
Yeah.
And there's all this kind of uncertainty. And it makes me wonder, has anybody really gone out there and thought and mapped out a clear vision of what the agentic enabled enterprise looks like 10 years from now, and then mapped a kind of technology strategy to that? I haven't seen it.
So I'd say there's kind of two forks to your answer. I think the first one is that when you talk to general purpose IT folks, I think you're absolutely right. They're still trying to figure it out, because what they're looking for is a standardized solution across the business, right? So one of the things is they're looking for, email level, something that's a technology use case that's so pervasive that it touches every single person in the business. Mm-hmm. But if you were to go talk to the head of application development at that company, or, you're going to find that they're using AI very well. And in fact, when I go talk to IT leaders that are in that space, the feedback I'm getting is, we're using it, and we're already starting to hit issues.
Yes,
right?
But
so there's the use cases in the business that are being used, right?
But that's part of the problem, right? It's like there's not an organization-wide kind of like coherence to what this looks like. I can tell you, as somebody who was in IT, I thought I knew everything about. I was in state government, the agencies I supported, and the workloads, and I didn't. And because of that, I wasn't able to have line of sight into how exactly the business is impacted and how I enable them. And that's the challenge. I say I haven't seen that kind of connection happen across an organization yet. Man, my hands look huge on camera. Sorry.
Yeah, I mean, like I said, the common use cases around customer service and application development are making progress, but everywhere else you're not seeing that level of rapid adoption and usage. But the flip side of it is also not just the IT side, but it's also the side of the vendor side where what they're doing is they're just going to these IT folks and they're presenting the technology and not the business side. Okay.
Yes.
Here's why this is a compounding problem. This is super interesting, is that what's happening is that the vendors are going in and they're doing what they've always done, which is look at my shiny new object, right?
Yeah.
And the customers, unless they have very visionary people, they are going, I don't know what to do with this. So what would they typically do in that situation? They would call up Accenture, or they would call up Deloitte or Tata or Wipro or whoever and say, hey, I need some help figuring out a strategy for this. The problem that I'm hearing from those firms is that what they're struggling with is they're having trouble being able to do business process transformation in the same way that they did before, where it was, let's come in and map the business. Let's go do $1 million project. Let's do all this stuff. Mm-hmm. They're struggling with just the idea of how does AI even change a workflow for what we do?
Right.
So the people who are not, the people who are traditionally supposed to be equipped to help translate these technology products into business value are even kind of stuck because they're struggling with figuring out for themselves. Now, I'm not even get into the whole part about when then the customer says, well, why aren't you using AI to reduce my bill? Because that's a whole different tangential problem that the GSIs are dealing with. Yeah. Just the simple fact of what's the template by which we can kind of stamp out the new strategy for customer XYZ and 1, 2, and 3 down the road. So it's kind of a double whammy problem right now because IT folks don't even know who to turn to for help.
You're on. This is the challenge of being in a nascent market, right? And they're going to figure it out, but there's going to be a lot of blood on the cutting floor before it gets figured out. And you were hitting on exactly what I was worried about, which is from a vendor perspective, they're just going in and telling the same old story to the same old audience. And I think they understand the game has changed and this is a different world we're going to live in, but I don't think anybody has quite figured out kind of what that end state looks like yet. And it's hard to,
just look at any use case with AI where it's like you go see the demo and somebody shows you the demo and it's canned.
Yeah.
And, people go, okay, I get it. You were able to do this. And then they go home and try it themselves and they get a different result. Right. So, I mean, I was at a conference 2 weeks ago with Mongo. And for the first time ever, I saw a demo of them going, here's how I built the app. Here's how I changed the app. And here's how I deployed the app and then maintained it. It was like, oh, you're actually showing me the whole life cycle. You're not just showing me the part where you have a bunch of files get puked into GitHub and some magic happens, right? Yeah. It's not about writing new code in the application development space. It's really more about maintaining it. And nobody's demoing that.
No,
right? So that's tricky stuff.
Yeah. Hey, listen, we're coming up to the end. I think this is going to be fun because, we're just getting started. And I think there's a lot of opportunity for us to kind of go deeper, but these will be topics for our next podcast. As we come up, and I hate to kind of transition out, but you got, 2 weeks before we meet again. What do you got going on in the market? What are you looking at? What are you going to be writing about? Where are you traveling to? What's the word, bro?
No travel, thank goodness. I am doing, I mentioned the SAP thing. I'm looking a lot at different data stuff right now. So, and really not in the sense of kind of traditional, I'm looking at it in terms of how data platforms can make good context for AI. So that's kind of a fun bit of new research I'm embarking on. I'm literally just publishing a piece on what I call optimizing agent costs. People are out there building agents right now, and then they get the bill and they're like, what the heck just happened? there's a lot of way to save monies. Lots of ways to save monies with agents, depending on what you're doing in terms of things like model choice and API usage and tools and things like that. So I just put out the first piece of that research, and the second piece is coming before the next podcast. So there's some really the fun part of 2026 for me is the whole, okay, it's getting real part, right? So I'm doing a lot of research and work on that and talking to a lot of clients about, hey, everybody's seen the V1 story. Let's get to the V2 story and talk about cost and talk about life cycle and talk about all the things IT people care about, actually.
Yeah, right on. Good stuff. I'm going to be going to, I think, just prior to our next podcast, I'll be at Vast Data's Vast Forward event, their first customer event. For those that don't know Vast, they're a huge some people like to label them as storage, but they're really a data management company in the AI space. And they've been killing it. They're in virtually every neo cloud and large enterprise out there. So I'll be at their event. And I'm kind of looking at things, the same AI equation you're looking at, but from the infrastructure side, and kind of with the Intels, AMDs, NVIDIAs, and Cerebruses and everybody else is doing, and how the vendors are going about this. But there'll be a lot to talk about.
Yeah, we're trying to enjoy a night as quiet as possible as of February, because in March and April, you won't be seeing this background anymore.
Nope, the wheels come off the bus. Yes.
All right.
Hey, listen, great chatting. Listen, if you like what we're talking about, please, or if you enjoy what we're talking about, please like and subscribe. You can find links to what we've talked about in the show notes. Please like and subscribe. And I have to reiterate, Jason is not a financial advisor, nor is Matt Kimball. So if you take anything we say as financial advice, shame on you. We're going to publicly humiliate you. And please feel free to comment on anything you heard in here. And any parting words before we say goodbye, Jason?
Have a great week.
Take care.